SA Lender Absa announced that its interim profit rose 29.8%, around the mid-range of its estimate. The bank's key measure of bank profitability was up 16.6% as most lenders rebounded from COVID-19 lows sooner than expected. Absa expects GDP to grow 2.3% in 2022, which is above the Reserve Bank's 2% forecast given at its July meeting. I caught up with ABSA CFO Jason Quin for more.
It was a tough backdrop. If you think about this last half, you just think about global geopolitical events, you think about interest rates starting to rise, you think about inflation picking up, you think about the impact load shedding had on the economies, lower GDP than we expected. So kind of let's call it a tough backdrop, but my sense is that as ABSA we executed well against our strategy. There was momentum in our business, coming into COVID. We navigated the COVID period well. Many of the calls we made turned out to be good ones. So we entered the half with some momentum in our company, and it certainly continued. We navigated all of these things, I think, well. And we produced, very, very strong earnings growth and good return on equity. So from that perspective, as finance director, I'm comfortable.
That's good. So on that note, then, if you're to look at the individual sort of business segments, what would you say were the key features from your point of view, given this backdrop that you've just described?
Fine. So I'll break it into three parts. I'll talk about our South African businesses, our businesses outside South Africa, and then corporate and investment banking on the one hand, retail business banking on the other. Nastasia, I think it's fair to say, corporate and investment banking kind of led us out of the crisis last year. Very strong earnings growth. I think we were well positioned in financial markets generally. We saw benefits from activities with clients around their own risk management, whether it was in interest rates or FX or commodities. Equities also did reasonably. So they already had a good base set. It was retail business bank that actually drove this period of growth. I'd say, just excellent focus on continuing to lend well. So particularly in mortgages and vehicle and asset finance. I was pleased also to see some new technologies launched in the personal loan space, which meant our customers could get personal loans from us in a bit better. But I think the real story is also deposits. The South African consumer, corporate and the like, still cash flush, still lots of liquidity in the system, and we benefited from, further deposit growth. And then, outside South Africa, our businesses did particularly well in this half. In fact, the earnings of South Africa and Arrow were more or less the same, up 28%. Whereas last year, Arrow's our African regional operations, were still struggling under the sort of effects of COVID. So, a nice diversified portfolio. Almost all our businesses came to the party in this half, nice balance between the results. So, that would be the answer.
So, we in that environment where we're seeing higher interest rates, inflation also rising, what would be the indicator, especially when you look at some of the data that you as ABSA have in front of you, as you look at your customers and you look at, your business side, your corporate customers, what would be the indicator that you're starting to see a little bit of pressure from the customer side of things?
Yeah, look, so we thought interest rates would go up. Just like everyone else, most economists would have predicted this. All that's happening, Nastasia, is I think interest rates are going up a bit quicker than we thought. We think the terminal rate of prime is still more or less the same. And let's say that's 11% prime. That's not very different to where it was heading before COVID. But then let's not forget the massive relief that was provided to the markets when interest rates went so low. We saw repo, for instance, over the COVID period at 3.5. Now, I've been a banker for 25 years. I never thought I'd see repo at 3.5. So let's not forget how low those rates went. And in fact, all we're seeing is a normalization. Sure, the curve's a bit steeper than we originally predicted. And sure, we always know that customers battle to adjust their monthly lifestyles if rates change monthly. In other words, if you have close proximity of rate hikes one after another, there's a period of some turbulence where people have to just reorganize themselves. And that speaks for, corporates just as much as the man in the street, to be honest. So, we've got various proactive measures in place with our customers to help them navigate that adjustment. When we price loans, especially, thinking about the affordability metrics, of course, we'd priced them and we'd taken the risk appetite around the assumption that rates would go up. and get to these sort of levels, the normalized levels. So, from an affordability perspective, I think the South African consumer will generally be okay. The inflation risk that we all face is a very real one, but once again, I see some of that as just a normalization back to pre-COVID, of course, except for the oil price, which we know is very high at the moment, which might abate should the geopolitical issues around the world get resolved. Those are the key drivers, I think. GDP, of course, is a big one. GDP is very soft at the moment. You're talking in South Africa, 2% Just remind you, we're in 12 countries outside South Africa, which have better growth prospects where the growth or GDPs are almost double that. So, you need a diversified portfolio as well if you're going to outperform.
Speaking of GDP, you're foreseeing 2.3% in 2022, higher than the SABC forecast. And of course, we've got the Eskom and load shedding being the elephant in the room, sort of the hindrance to that growth. What do you think will be, I suppose, supportive of this 2.3%? I mean, what are you seeing in the next 6 months or so?
Look, the first thing I'd say is there's forecast risk for anyone that's making forecasts at the moment. It's been that type of period where you just see turbulence in data. You see geopolitical events unfold. You see markets run in one direction and then in another quite dramatically. So tough time to do any forecast. I think my own sense, and I'll use interest rates as an example first. I think if you look at forward rates, the markets run a little bit ahead of where I think the real rates will end. And I think it's kind of similar on inflation. There's a lot of base effects here, Nastasia, it's difficult to predict. The base was low on some items, it grows, then it gets to a normal level. What's the pace of it? So there's some forecast risk. I think we see still, vibrancy in many parts of the economies we're in. If I think of agriculture, if I think of resources, so it's a very awkward moment to forecast, but we see stabilization in Eskom at the moment with little load shedding. Now that's one of our views that potentially there's going to be more stability of power supply. Near term is hard to predict, but certainly all the actions the government's taken around renewable power and all of these things, diversification of power supply, should stand us in good stead down the line. So that's where we are on it.
Okay. The next 6 months, what will you and the team be focusing on? Are you anticipating more CapEx spend, especially as you try and get more customers into that digital space?
Yeah, look, we've done an exceptionally good job, I think, as ABSA relative to market on our cost base. Our let's call it underlying non-performance costs only grew 4%. But within that, we invested a lot in technology. So our technology investments are up dramatically over the last few years. Certainly in the period up 12%, so we're investing in digital. We already see payback from the investments we have made. So our corporate bank got a whole new transactional capability year before last. And to see the customer response to the quality of service that they get through that channel has been exceptional. It actually comes through the numbers already. We see non-interest revenue or fees and commissions in corporate banking, up 12% in a period like this when the market's pretty flat. So more to do, I think, in the retail banking space across the continent, including South Africa, where we've got investments underway for our digital capabilities in terms of our app and what you can do, the functionality around that. So, a good story. And I think more effort from our side around the retail space.
That was ABSA Group CFO Jason Quin. That is it from me. We'll have more news with Nompumelelo after the break, so stay with us.